Hey, good morning, everybody, and welcome to episode 52 of the Michael Pina Sr. Show. And I'm your host, Michael Pina Sr. It's May 18th, 2018. And Warren Buffett said, the more you learn, the more you earn. So I hope you're back here to learn. We went through a lot of Mount Ida stuff, and it's not over. We're going to have Michael Pina Jr. on the show May 20th. That's going to be this Sunday. So you can watch that possibly Facebook Live. I'm not sure if I'm going to have things set up right, but you will be able to see and hear that interview at podbean.com. So go to podbean.com and find me at the Michael Pina Senior Show podcast, and you'll be able to hear that interview with Michael Pina Jr. Listen, we're going to get back into the basics here again and, talk about what we need to do to be successful financially. Because the last thing I want to see you do is to go through anything that Mount Ida went through, going into debt. So listen, the backbone of everything that we do here is the budget. Go to everydollar.com and download that and start doing a written budget. You need to do a good budget. And if you need help, contact me at coachp2210@yahoo.com. We can make an appointment. Go to my Facebook page at Pina Financial Coaching. And, let's make sure that we're on the right track. But the backbone is the budget. So if you don't have a good budget, everything else that I teach and everything else that you need to learn, you're not going to get, okay? It's not going to work. And it takes time. It takes work. But if you do it, you'll be on the path of financial success. And that's what I want to put you on. And that's why I do what I do. I want to put people on the path of financial success. And listen, I teach in my philosophy, and what I try to hold you accountable for is I teach the Dave Ramsey baby steps. Okay, and just so in case you don't know, you can go all the way back to, I think it's episode 4, where I go into more detail on the baby steps. But baby step 1, a $1,000 starter emergency fund. Okay, that's baby step 1. Baby step 2, we're going to do the debt snowball. So we're going to take we're going to list our debts, lowest to highest, and we're going to start knocking off those debts from the smallest to the largest. Okay, baby step 3, we're going to fund a proper emergency fund of 3 to 6 months of expenses. Okay, and that's going to go into a bank account so you can get to it very quickly. Baby step 4, okay, we're going to put 15% of our whole household income towards retirement. Baby step 5, we're going to save for college education. Baby step 6, we're going to pay off the mortgage. And then baby step 7, we're going to give and live like no one else. So if you can follow these baby steps and you need help, give me a call, 774-287-9323. Make an appointment to see me. I want to teach you this. I want to hold you accountable. I want you to hold me accountable. All right? That's why I do this show. I hold myself accountable. I want to hold you accountable. But I get into these baby steps because I had a question, and I was, everything that we were going through with Mount Ida and everything, I was able to answer this question through an email, and I got right back to this guy because, he had a financial planner, which I'm going to talk about, come to his home, and I talk about term versus whole life, which is not a baby step. Life insurance is not a baby step. Listen, if you got somebody relying on your income, you need life insurance, okay? So if you follow the baby steps, when you get to baby step 6, you're self-insured. You finish baby step 6. You probably got $1 million towards retirement. Your home is paid off. People can live that rely on you, can live on what you've left behind. You're self-insured. So that's why I recommend term insurance. And you get 20-year term insurance. You should be done with the baby steps in 20 years. And, you're living and giving like nobody else. So, we don't need whole life insurance. And I talk about that in episode 3. I'm sorry. Yeah, it's episode 3. But the question that was asked is this from John F. He asked, what is Index Universal Life Insurance? Is it a good investment vehicle? My financial planner, said it would take care of my life insurance needs and also help me build wealth. Please advise me on what you think. Well, John asked me this last week. He emailed me and I answered him right back, and I told him I'd talk about it on the show, later on this week, which is now. I told you what I think about term and whole life. You don't want to get whole life. It's just an expensive way for you to get life insurance. And basically who's making money on that is, and it's not, he didn't have a financial plan. He's got an insurance salesman at his house, and that's who's making the money. They make that money on commissions. I told you I work for an insurance company. That's why, I know a lot about life insurance. They taught me very well. I became very good at my job. And that's why I left it, because I didn't believe in what I was selling and what I was doing, because I was making money for myself. And they were teaching me, to make money off other people's money that really, it was the wrong thing to do. Term is the best way. Take 10 times your income, and that's the amount of insurance you should have. 20-year level term. Now, to answer his question, Index Universal is basically, what they do is they take your cash value and they link it to the Standard & Poor's 500, and your money is gaining interest according to that. But the problem is there's a formula that's outlined within the policy and how much of that cash value you really get. And the fees are not disclosed. And I'm telling you right now, the first year premium, you always look, when they show you these charts, they'll come in and show you these charts. Your first year, at the end of the year, your cash value is zero. And the reason is because that planner, which you had an insurance salesman, John, at your home, is getting 100% of your premium. So you're not gaining any cash value. You're not getting anything. You could put your money into, and I recommend this, and if you're not on baby step 4, I wouldn't recommend investing at all anyway. But I also, once we get to baby step 4, we're going to put our money into, good growth mutual funds. And that's something that you could sit with me and we could talk about. But anytime they come in and they start talking about variable life insurance, universal life insurance, all these things that you don't understand. And again, if there's anything that you don't understand, never, ever, ever put money into something that you don't understand. Educate yourself, learn, educate. But listen, whenever they do that and they start putting all these bells and whistles, it's whole life insurance. It's whole life insurance. It's going to cost you a lot more money than what term would. And you're basically just making that salesman, that insurance salesman, money. And you could be putting your money towards something else. I mean, John doesn't say how old he is here, but I was talking to one of my clients. Basically, he got rid of all his bells and whistle friggin' life insurance. And he told me that he was spending almost $1,000 a month on life insurance because he had a variable life. He had all this other crap life insurance. And he had $500,000 in coverage. He went and got $500,000 term, recommended by yours truly. He got rid of all the other crap insurance that he was spending his money on. Basically $12,000 a year, which kind of blew me away. Because I went through the baby steps with him. He's out of debt. He's on baby step 3. And now he'll be out of baby step 3 real quickly. But anyway, let me get back to the life insurance. He got $500,000 of coverage. He's age 30 for $525 a year. I don't know. And now he's going to be able to fully fund his emergency fund. He's out of debt, which was awesome. Fully fund his emergency fund. He'll be on baby step 4. This guy, without a doubt in my mind, is going to be a millionaire. If he kept on giving his money towards these other, and I looked at the cash value, the amount of money that he put in didn't even equal the amount of cash value that he had. So don't get sold on this shit. It is. It's crap. Please get in touch with me if you got one of these insurance salesmen at your home. Don't buy anything or put money into anything that you do not understand. Follow the baby steps. If you don't understand and you need me to hold you accountable, we're going to set the budget, go through the baby steps, and we're going to talk about life insurance. That's the way that I coach. That's the way that I want you to learn. And that's the way I'm going to hold you accountable, because that's the way you're going to become a millionaire. And, I'm on the path. I want you on my same path with me. All right. So listen, I'm living my passion one day at a time. John, I hope that helped you. And I want to win, and I want to win. I want to help you win. Let's win together.